John Rogers joins me live from the London Stock Exchange. Thank you so much for joining us on the show this morning. Now, in March 23rd, actually, Sainsbury said that sales growth slowed because of higher fuel costs. This time around, you're actually reporting better than expected figures. What has changed?
Well, I think it's fair to say that the whole industry recognises that the months of April and May were very buoyant for the sector. A royal wedding, a couple of bank holidays combined with some good weather has driven some very good sales. But that's not to say that the consumer is still in a very challenged position. I think going forwards we would expect to see the continued savvy shopping, seeking out bargains that we've observed over the last 12 months.
So that means that the economic environment will remain uncertain and it will still be very tough out there.
I think it would be sensible to work on that assumption, particularly with the potential for interest rates to increase over the coming months, and of course potential job redundancies as a result of government cutbacks. I think it would be fair to say that most consumers are in a place where they're guarding their budget and they're spending their money very carefully.
So, John Rogers, have you had to change your strategy in the last 5 to 6 months to actually focus on cheaper products to lure those customers affected by the austerity measures, but also affected, of course, by this rising inflation?
No, not particularly. I mean, we've always had a very universal strategy. So we've always had a very strong basics range in our private label. At the same time as we relaunched our Taste the Difference range just before Christmas. So by offering customers a very broad spectrum of products, they can pick and choose. And indeed, it's very common for customers to have both our value range, our basics range in their basket, at the same time as buying Taste the Difference.
When do you expect the UK environment, economic environment, to stabilise a little bit? Will we have to wait until 2012?
I think it's very difficult to say. I mean, certainly if you look at where consumers are, which is of course very important to our business, most consumers are looking for a very cautious outlook for the next 12 months, and certainly that's the view in our business.
But you're not afraid of expansion during this time. What about any acquisitions?
No, there's no acquisitions on the horizon at the moment, but we are, as you rightly say, expanding, and we're expanding because we see significant growth opportunities in the medium to long term in the UK market. I mean, Sainsbury's is a business that's historically been somewhat focused in the south and the southeast, and we're now putting down a lot of new stores in those areas where we've historically not had a strong presence, so Scotland, for example, and the southwest. But
what's your biggest concern today? Is it sluggish growth or accelerating inflation?
I don't think either of those concerns us really. I think we've seen sluggish growth for the last 12 months or so, and it's likely that growth will continue, that level of growth will continue going forwards. I think inflation has probably peaked. I think we're seeing food price inflation in the customer's basket at around 2.5% to 3%. I think that will probably maintain for the next 6 months or so, but may well indeed start to come off towards the end of this financial year.
John Rogers, a real pleasure to speak to you. Thank you so much, the Chief Financial Officer there at Sainsbury.